Hey guys, welcome back. Alex, we're gonna talk about some trades you recently made. I think they were shrewd, but I wanted to share them with the public. I think they're very shrewd trades. I think that they was look around the corner type of trades. The first one, let's talk about this one. We're gonna talk about the first one you got into Meta. Meta. Let's talk about how you got into it and what made you exit out of that, and then where did you go once you sold that position?
Okay. So Meta back, I can't remember what year was it. Was it like 2022? It was like 2022,
2023.
2023.
Yeah.
Meta
Yeah.
stock had dropped hard. Um, it dropped from, I want to say it was up in the threes down to like 90 something dollars a share.
Yeah, it was around January 2023. But nope, nope, nope. Yep, January 2023.
Yeah, so January 2023, when it started dropping, right when it hit below $200, I started buying and I kept buying on the way down. I um I didn't I mean it wasn't like I got into like a huge position, but I accumulated like 28 shares and I told Kirby, I wish I'd gotten more. And that's one thing I learned. I mean, now I know for the next time if there's ever one of those big Magic 7 companies, that we all know about, Amazon, Facebook, all those. If they ever come down again, I'm gonna start dumping money into them because we know where they're headed. We know where the future is headed. But I started buying sub 200 and got a total cost basis of $148. And I held it up until about, I think, last month. Um, and shame on me because I didn't notice the that squeeze going on, the TTM squeeze. I didn't notice that, but I exited at $566, close to 567, um, for a or plus $10,000 profit on the trade. So made 10,000 on that. That was profit amount, and then with that money. I went into Disney.
So the question is, wait. The question is, so you got in at 140. You got in at your average was 146. So you got out with like a 230% profit, right? All right. So what made you exit that position?
So I exited the position to go into another investment
But why you said you was gonna sell it? That's the question. What made you say, all right, it's my time to sell this one?
because of the prices that the other investments were at.
Okay.
So so I had exited. Well, I mean, okay, so more detail into that, I guess, is that Meta is pretty high right now. And it's not to say I don't think that they can even double where they're at right now, but just doing a quick analysis on it, if it were to double, it would require another $1 trillion plus of capital in order to get another 100% on where it sits right now. So that was my thought process into it as well. I'm looking at, okay, if Meta still had, if I'm thinking, oh, they could still go triple from here, I would have held. But Meta is at a pretty high point. It's not that I don't think that in the future they can keep going, but where they're at right now and seeing that there's other opportunities available that I think these opportunities can double or triple, I would rather take that profit and then put it into those investments so that I can see that return on that end rather than hoping for another maybe 20% plus on what I'm already holding. I mean, because once I sold, I think Meta had eventually like the following weeks had tipped at like 600. I mean, that's cool. Another plus, what, 8% on, from 560 to 6. I mean, that's cool, but if I can take all that money that I made and put it into these investments that are deeply depressed and they double, triple from where they're at, and which the investments were actually SoFi, Nike, and Disney, those three. If I can put them into these and then they bring, it's almost like cycling at a like resetting my trade basically. Like cycling back into depressed investments. So by the time if Disney, Nike, SoFi come up, and then there's a company like Netflix or Apple or something that's down, it's all about finding the next investment, I guess, that will bring me that value rather than holding on to an investment that's already at its peak.
Okay.
What opportunities
So,
are there?
right. So the next question I got, what did you sell anything else or was that the only one?
I sold Amazon and then Apple as well.
So when did you get in Amazon and when did you exit?
Amazon, I was in at, I want to say it was 96, 94 per share. And then I exited
Mhm.
at 190 something.
Okay, so that was another 100% gain. And then where did you put that at? Was that Disney,
That was
Nike
the
also?
same. All that capital went right back into, yeah. So once I sold
And then
Apple, Amazon, Meta, all the capital from that went into those three, SoFi, Disney, Nike.
okay, and then so for Apple, what price did you get in? What price did you exit?
I got in Apple at around 171, and then I exited at 225, 224, something like that, around there.
Okay, so about another 30% gain. And now the reason why I said that they were true moves because most people, especially newer investors, they see a stock and then it's going to stretch valuations and they think that it's just going to keep going up. Now, like you admitted that over time that you believe that Meta and then will go up, but you figure that currently right now the valuation of Meta, uh, Amazon, and Apple was extended. So you got out of those and got into more depressed valuation stocks like the Disney that's trading uh, one time or two time sales. You got into companies like that so you can deal with the upside of that. So those are true moves, and the reason why I point them out is because, like I said, new investors when they see a stock going up, you up 2, 3, 4x on a stock, they just say, "Oh, it's going 5, 6, 7, 20x." The Nvidias of the world, those are out there. Those are anomalies, especially and then like Meta is a more mature company. I mean, Amazon, excuse me, Nvidia is a more mature as time has been on there, but the time that they brought that new space of the AI chips and things like that, that's a very new sector in the global economy. You get the Teslas out there, and as we've seen, Tesla eventually got super extended and then it came back down to reality. Same thing with Amazon. The reason why you was able to get into Amazon in 97 because Amazon was super extended and then it came back down to reality. And that's the whole crux of it. And the reason why I wanted to point that out is mainly for investors, especially new investors or traders, that stocks are not always going to go up to the moon. And you said it. I mean, yeah, Meta can, double from here and get to $1,200 a share, but their valuation will have to increase by 1.46 trillion dollars to get to that number. So while you fighting to get to that number, is other stocks that's depressed. I mean, you the major run, you major ride, you the major profit. So now you can go cycle down to more depressed stocks that's at a more attractive valuation and go in there and ride those up. Because the path to them, getting up, 40, 50, 60, 70, or maybe even 1x percentage is more likelier than Meta doing it. I mean, could Meta come out with some, hybrid world or whatever the stuff they call this now with Oculus and all that, and that's the new, global craze? Yeah, but it's more likely that Disney figure their situation out. SoFi being a smaller cap company can more enhanced on what they're doing to double from their price point, their valuation. Nike, especially being depressed, especially with the China issues with supply chains and things like that, could they turn that around and get back to their legacy ways of being high productive companies? Absolutely. So it's a more likely chance of that before Meta's getting another $1.46 trillion of valuation. So that's why I just want to say those are true moves, and I like the thought process behind them. You got anything
Yeah.
else, Alex?
Yeah, and now I see what your question was really. I mean, that was my whole thought process into selling, into why I sold and switched my investment. Like, I think a faulty mistake a lot of new investors make is you're not understanding the stock price is relevant to the market cap of the company. So like you might look at Apple and say, oh, it's in I'm not even looking at it. It might be in 220, 230 range. Oh, it's so close to, 350. It's gonna have to get another trillion and a half dollars to get to that amount. It's for it to go from 220 to 440 to double to get 100% gain. It's going to need another $3 trillion in market cap and investments to get to that amount. So, right now in this current age, we've seen companies other than that Saudi company that's worth like $6 trillion. We've seen companies reach that $3 trillion club or $3 trillion mark. We've seen Nvidia, we've seen Apple, we've seen Microsoft all hit these. We know right now that's basically okay. This is the capability companies can get to in this current age, in this current year. It's not to say in 10 years Apple can't hit 6 trillion or something, but right now we know that's kind of the top notch right now. So that's kind of where I looked at it for Meta. Okay, Meta's in that $1 trillion club. Okay, I could kind of see, them hitting 3 trillion, but that's a huge investment. That's going to be a huge investment. It's not just going to happen overnight either. So, looking at these other companies that are extremely depressed and understanding and knowing these companies, I mean, Nike is global, Disney is global. Like, we know these companies. And then SoFi was one that's, maybe taking more of the risk end, but we've been following SoFi for years now since they dropped, since they were even up, paying attention to them while they were up. They come down. We've been talking about, investing in them since they've come down and listening in on earnings, listening into all the deals that they've been doing, getting more legitimized. So we know that SoFi is growing and growing and growing. This is just, it's not a stock recommendation, but for small cap companies like that, it's like you got to look at what the company is actually doing. For the other two, Disney, Nike, we know those companies worldwide. So for me, it was like the same aspect that I went into Meta for was going into Meta because I know what Facebook is. They're down here. If they're making more money down here than they were back here when they were up, then it's a no-brainer. It's the same thing for Disney, so same thing for Nike. So that was my whole thought into it. Just cycle out the profits, put it back into something that's at depressed value.
Sounds good. If you got like, subscribe, please click the like button, subscribe button. Please share this video, especially for all those new traders that you might have out there in your family or friends. Please comment in the comment section. You can tell us how bad the trades were or how good certain stocks is, or you can even put in your own stock recommendations. But until next time, we'll see you in the next video and happy trading, everybody. Have a good one.
You guys.